Daryl, let's talk about seniors and the stock market. The stock market has seen some ups and some pretty big downs in the last few years, and I think a lot of seniors are questioning this whole idea of having some of their assets in the stock market. Do you think they should or they shouldn't?
Well, I think, again, they should have some assets in the stock market. The issue is are they able to tolerate the volatility? And it's so different given 08 and 09.
Now, there's a big sacrifice if you don't tolerate the volatility, because you're basically saying your returns will be limited to what GICs and bonds offer. Do you have to take the volatility if you just don't have enough retirement assets to generate sufficient income with bonds and GICs?
I think that you look for a combination of return and amount of volatility you can take, or risk tolerance as it's called. And that may sound cliche, but in the current environment it's very true. And we don't see these interest rates curving up for quite a while.
So it sounds to me like you're going to have to suck it up and have some of your assets in stocks then.
The answer is yes. There's some tax efficiency on non-registered assets, of course, but dividend yields are exceeding 10-year Government of Canada bonds almost by a multiple of 2. And that's when you're looking for income in retirement. Where is the best place to go to get that?
So it sounds to me in closing that you're directing people to blue chip dividend stocks.
Correct.
Can you give us just a couple names that people might take away with them?
Traditionally, the banks have been money-making machines, but again, we have to be cautious there. Utilities, it varies depending on what's happening in the economy.
And I think we want to have a mix of these things and not rely on one or two names.
I think if I could leave you with any advice, you do definitely want to have a mix, and you want to have your assets mixed as well.
Thanks, Joe.